Hi, and welcome to the September 12th edition of the Stockscores Market Minutes. This week I'm going to talk about the importance of abnormal volume. If you want to find stocks that are moving up faster than the overall market, you have to seek out something called alpha stocks. These are the stocks that are performing on their own because their story is positive. They're able to get away from their correlation to the overall market. The most important signal of alpha is abnormal price and volume behavior. We want to look for stocks that are showing strength with abnormal volume because abnormal volume is the fuel of the buyers. It is a sign that investors are excited about the company. When we see abnormal volume in a stock, we really have an opportunity to find a stock that is going to beat the market. Here's a couple of examples of stocks that I've been trading recently. This is OnTrack Innovations, a stock that I bought and held for only about 3 or 4 days, but made a 40% return. The thing that made me look at the stock was the abnormal activity that you see at the blue arrows. Those were the days when it traded a lot more volume than normal with a lot more price action than normal. Now, oftentimes you'll see abnormal price action, but without abnormal volume. It's important that you have both. Here's a stock that I bought recently, which started trading with abnormal volume 4 or 5 days before the big price jump, and it shows how the volume can sometimes lead the price action. And again, here's a stock that I bought, and within a few days it was up 20%. So the key thing is to look for that abnormal activity and including abnormal volume. All right, let's get into the market analysis. It was one of the first down weeks for the market in, I think, 6 last week, but we're still well above the upward trend line. It does look like the market's going to roll over and maybe test that upward trend line in the near term, but I don't see any reason to say that the bull market is over yet until we break that green line that we've been talking about for really a couple of years now. There's no reason to be alarmed. TSX 60, despite weaker oil prices, despite weak gold prices, the TSX 60 still manages to move up. And that is quite an achievement. But remember that one of the reasons these indexes can do well is because their performance is dominated by the biggest of the big companies in the index. So in Canada, the banks are really leading the way. In the TSX Venture, we did see an effect of that weaker commodity prices. The TSX Venture has slid back to the support line, which I have drawn in green, and it needs to hold that support line. It's right at it now, and I do think we'll see a bounce back on it next week, but there's really no reason to be overly enthusiastic about the TSX Venture right now. There are the odd stock that comes along, and if they're trading that abnormal volume that I talk about, then that stock has some good potential. All right, here is the TLT, and this is probably the most important chart this week because it is the bond market breaking the upward trend line. Now, I'm going to put a little caveat on that. Anytime a trend line is broken after a number of down days in a row, it often bounces back. It's sort of got this downward pressure that takes it down through the trend line, and then it comes right back to close above it. So we want to watch it next week very closely. Treasuries should bounce next week. Doesn't mean they will, but it should bounce. That's what the most probable outcome is. If it doesn't, then I think we're looking at higher interest rates ahead. And if you're looking at locking in a mortgage, I would be visiting the bank real soon. US dollar, real good strength over the last couple of months. It's coming up to resistance. I think it could have another strong week or two before it starts to roll over. And it's really heavily overbought right now and due for a pullback, but there's no sign of weakness yet. And so the US dollar continues to move up, and that's one of the reasons why commodity prices are moving down. Again, I do think that in the next week or two, you're going to see the US dollar top out, and the euro and the yen, which have been really beat up lately, have a little bounce back. Here's a chart of gold, and this is the real important chart for gold because you can see that the long-term monthly chart is showing a breakdown. Now, keep in mind, this is a monthly chart, which means that we still have 2 weeks until the month is over. If the US dollar does in fact top out and start to pull back a little bit, I expect that there will also be a bounce back in gold, and that could keep it above that upward trend line. You look back in 2008, it sort of dipped down below that line there, and we've dipped below it a couple of times. So it is possible that we could be below the line and then still come back up. But as it stands right now, this is a long-term sell signal for gold. Now we have 2 weeks until we really can judge it as a sell signal, because there's still time in the month for the gold price to come back up around 1230, let's say. But if it fails to do that, you want to be real pessimistic on the long-term outlook for gold. Oil market has pulled back to its upward trend line. I think it's going to bounce in the next week or two here. It should hold that long-term upward trend line. And again, oftentimes prices will dip down below the trend line, like you see it having done this week, but it came back to close right at the trend line. So we'll see if oil can hold or not. It is somewhat oversold and it should bounce back, but we need that to happen. Again, key thing that's going to hold that is the US dollar getting a little bit of a pullback. We are seeing a little bit of an uptick in the VIX, a little bit of an uptick in fear, a little more volatility in fear. You can see a little more volume in the VXX last week, and that points to the possibility that we will see a little bit more of a pullback in the overall market in the next week or two, and that would be something typical of September. Market bottoms in October, and then we're off to the races in through November. So we are at the near the end of the what I call the tough time for traders, from May until October, and then around October trading environment gets a lot better. It's a lot easier to make money. It's been a grind the last few months. That's normal for this time of year. It does look like it's starting to turn. So my outlook then, US stocks bullish on both the short and long term. A little bit of caution on the short term because we are seeing a little bit of a rollover there. Canadian stocks bullish on both time frames. Gold bearish on both time frames, but as I said, there is some potential for a bounce back before the end of the month. Oil right at that trend line, so neutral long term. It's bearish short term because we've been moving lower. Stocks continue to run in that bullish trend, but there are signs that investors are tiring of chasing large cap stocks, and I'm starting to see signs that there is a rotation into the smaller cap stocks, which have really lagged the large cap dividend payers. The strong US dollar is hurting commodities, causing gold to threaten its 10-year upward trend line. Oil also suffers from this strength in gold, but is showing signs of a bounce. Well, that has been the Stockscores Market Minutes for September 12th, 2014. I hope you all have a great week in the market and trade well.